Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
G'day and welcome to the COB. I'm Andrew Gagan. Thanks for joining us here at AusBiz as we wrap up the day and the week. And well, on both counts, it's been negative, I'm afraid, as we get June underway. And let's take a look at where we're likely to finish on this Friday. Down around 0.7% on the CBO 200. Little less exaggerated on the S&P ASX 200, down around 2/3%. But we've seen a rotation. I'll get to that in a moment. In fact, let's get to the themes of the day. And week, that's certainly been the case this week, down around 1.2% over the course of the week, as I said, to get June underway. Stock rotation. Now, this applies both here and also in the US. In the US, we have seen a rotation out of tech and into some of those unloved stocks, particularly healthcare and the banks. Whereas here, we've seen a rotation out of the larger sectors of the materials and the banks into the unloved stocks, such as healthcare, but also the so-called dogs of the index that have been in the kennel. We were talking to Henry Jennings just a little earlier, referencing those dogs, the likes of CSL, ResMed, Cochlear, that have really suffered. Also tech as well, those ones caught up in the SaaS apocalypse, they have bounced again as well. And fragile ceasefire, well, what's new? Look, we have had a ceasefire declared between Israel and Lebanon, but the key player there is Hezbollah, which has rejected that. And more broadly, of course, the Middle East conflict is all about Iran and the US, and still no sign whatsoever of any deal being closer as far as ending that conflict. Let's take a look then at the sectors and how they have performed over the course of the day. I mentioned the banks and that the rotation out of big banks. Let's see if we can get some of those up. And there is evidence of what's happened right there with the largest Commonwealth Bank off a chunky 1.5% plus. Similarly in the miners, BHP, Rio, Fortescue. The iron ore price down around 4% over the course of the week. That is over supply concerns, certainly out of China. A lot of discussion there, in fact, with Graham Samuel, the former ACCC chief, just as far as there was way back when talking about a potential tie-up between BHP and Rio. But there was concern about collusion there. But, well, you know, perhaps that's needed given what we're seeing out of the Chinese market at the moment. And elsewhere, we'll take a look at those sectors that have benefited. It is healthcare. Look at that. CSL, Cochlear, ResMed, all up more than 4% plus today. Pro Medicus continuing its rise after numerous contract wins. Let's get to the stories of the day. Then Megaport, it's back online. It's raised $518 million from institutional investors as it refocuses on AI. Perpetual, it'll buy 70% of loan and servicing platform Interfi Systems. NIB gaining on the sale of its travel insurance businesses. And Resolute Mining has cut its quarterly production guidance at Syama Gold Mine in Mali due to security concerns. Monadelphous, it's won a major construction contract with CS Energy worth about $380 million. So let's wrap up the week and check in with AMP. We are joined by economist Mi Bui. Mi, welcome to you. We're just talking about what's going on in the share market, of course. We know the records continue to tumble on Wall Street. Australia, though, very much a laggard. How do you interpret what's going on at that level, and perhaps more fundamentally, the economic backdrop in both the US and here in Australia?
I would say that the Australian economy has definitely been underperforming a lot of our Western peers. And the main story here is definitely an inflation story. We know that there's been a bit of a rise in inflation around the globe, with the US inflation this week expected to rise up to 4.2% by Wednesday. So that's for the May reading. But Australian inflation has actually been quite a bit of an outlier. We've had a peak of inflation at 4.6% 2 months ago. And even on the core number, our core inflation of 3.4% is actually quite a bit higher than all of the US, Eurozone, Japan, Canada, or even our New Zealand friends. So I think that, the market has definitely been quite negative on the prospect of higher rates in Australia. Market pricing, I know, has bounced quite a lot now. Around in August, they're pricing in a 50% of a rate hike, but a full rate hike is still priced in by the end of the year for Australia. So obviously, the prospect here seems to be a bit dimmer than compared to a lot of our other stock markets around the world. And also, I think with the Australian story, we do have more of an exposure to banks and mining stocks. We don't have as much, tech sector within the ASX 200. Look at Korea, look at the US, for example. They are both benefiting from that AI story, and
Yeah.
we are definitely lagging.
Goodness, Korea, talk about climbing a mountain, whereas you look at that Australian share price, it's looking like the patient is dead, essentially, completely flatlining. What, though, are you seeing with growth here? Because we did have that GDP readout for the March quarter, and so 0.3% over the quarter. But you take a look at that GDP read per capita, and it tells a different story.
Yeah, I think we're definitely on the verge of a GDP per capita recessions in the upcoming quarters. Of course, throughout the history, there has been a lot of times when GDP per capita goes back, but the actual GDP number is not in a recession. But I think overall, it's still not a great number for Australia, because that just means that our living standards is going down. So over this week, we've seen that the pace of growth in the Australian GDP number has pulled back quite a lot, from 0.5 to 0.6% last quarter to just 0.3% this quarter. We've seen that consumers are not really spending a lot more on discretionary purchases. Instead, we've only seen most growth in essential spending. So those are food, fuel, as well as a lot of the other essential spendings for the consumers. A lot of that is stockpiling ahead of the war, but overall, we do see some weakness in that consumer sector there. Even in other sectors of the economy, such as mining, it seems quite weak this quarter as well, with a lot of climate events. And obviously, everyone's been talking about the fact that AI is actually saving the Australian economy, with a 6% increase in private business investment driven by investments in data centers here in Australia. But then a lot of that, we're still in the fit out period of those data centers. So a lot of that has been imported. So the impact of data center to the Australian economy is actually quite neutral at the moment. It's not really a negative or positive in the short term. So overall, I think that, over the next coming quarters, be prepared for more negative economic growth data, just because we've had 3 rate hikes already. There might be more rate hikes to come. So those would definitely put a brake on the pace of growth in the Australian economy.
To what point, what's the chance of recession, and also, dare we say, stagflation?
So this just yesterday, Michelle Bullock said that there's not really a risk of stagflation in Australia, but I would say that we get a little bit of a hint of it. I mean, inflation is already rising while growth is slowing. So I would say that we're teetering on the edge of a stagflation scenario here. For an outright recession, aka 2 consecutive quarters of negative GDP growth, I would say the probability is around 30% over the next 12 to 18 months. It's not particularly high per se, because at any point in time, you would have a recession probability of around 10 to 15%, because sometimes things just go wrong. Right now, we think that the recession probability has definitely risen with a weakening consumer sector. That's half of the economy already, with a lot of the supply chain issues that are affecting businesses. But that is definitely not our base case. Particularly, I think a lot of things have to go wrong for a recession to occur in Australia. I've been saying that, there are a lot of negative headwinds for the economy, but also remember that we were starting from a rather strong point. Over the last year, the Australian economy grew by 2.5%. So that's actually the fastest pace of annual growth since 2023. So we have to slow a lot to get to a recession. We think that the Australian economy might slow to around 1.5 to 1.7% year over year by the end of this year, with all the rate highs, with all of the war issues, but that's not a recession.
So looking forward to the RBA meeting week after next. Expectations seem to be from the likes of yourselves there at AMP and elsewhere that they will hold but potentially hike again in August. Now, of course, we've had another key economic event in terms of the Fair Wage Commission boosting the minimum wage by 4.75%. That was certainly higher than expected. It's certainly not doing any favours in terms of the RBA, but how are they going to interpret that, do you think, and where wages growth is going?
So far, I don't think the RBA has, been very explicit in their interpretation of the wage increase. So actually, minimum wages are going up by 6% over the next year. Award wages are going up by 4.75%. And we think it's actually quite an outsized increase. It's the highest since the 2023 financial year. As you can see on the chart right now, it's actually higher than inflation. I understand the Fair Work Commission decision because they probably want to match the expected peak inflation rate by the second quarter of this year, 4.8%. But I think doing this at the moment just means that there might be some leaking of these wage pressures into other sectors of the economy, like EBAs or even other private self-negotiated wage agreements. This is happening at the same time that businesses are having a lot of input cost increases from the war in the Middle East. So we think, and also this is happening at the time that the economy was growing above speed at 2.5%. So all of this means that we think wages growth would go up to around 3.7% this year from the current pace of 3.2%, which means that particularly services inflation, which depends on wages, would have to go up in the near future. We think that the RBA can definitely hold in June just because they've done 3 consecutive rate hikes. By their admission, rates are already restrictive, and the latest economic data are actually kind of okay. Inflation for the last month was quite okay at 4.2%. But we think that with these wages pressures, inflation would have to take up, and it will be a little bit more sticky than just the supply chain issues, which means that the RBA would have to hike more in August or so, when the wage pressures are a little bit more evident in economic data.
And of course, we still have those inflationary pressures coming through from oil prices and, we consider what's going on with petrol prices. That fuel excise cut is about to come off at the end of the month. And it comes at a critical time too. We're all, many of us will be hitting the road on the long weekend. Yeah. So certainly watching fuel prices too, won't we, mate?
Yeah, I think a lot of people have already started to switch to EVs.
Yeah.
So hopefully some of our, watchers are not going to be impacted by it. But I think the longer that this war goes on, remember that supply is still down by 13% compared to the February level. This is global crude oil supply. So I don't know if Donald Trump really wants to make a deal by his birthday. His birthday is actually next weekend, so it seems to be a bit of a milestone for him because he already missed his son's wedding last week. So markets are still operating on the basis that there will be a deal. We don't know when that will happen, but we think that it has to happen at some point. If not, then our recession probability has to go up a lot higher than 30%.
Well, May, I hope you enjoy your 3-day break. Look forward to catching up with you again. Thanks for joining us, AMP.
Thanks for having me.
Let's now turn to our stock of the day. It was Treasury Wine Estate. Yesterday held an investor day and had a fairly dramatic restructure of its portfolio. In fact, to get across that, we were joined by a newbie for the call, Heath Moss from HLM Investments and Jonathan Takadina from MPC Markets.
A lot of it is out of their hands, unfortunately. There is a global wine glut. I'm lucky enough to be on the doorstep of one of the greatest wine regions in the world, in the Barossa in Adelaide, and I've got a few clients that help run vineyards, etc., and they're really struggling. Prices are quite low. Demand is obviously coming off as well. That China rebound really hasn't happened yet. The Americas is still stalling. And this is just not in Australia. This is globally. We're seeing a real wine glut.
They're turning the ship around and doing it quite well, and that's why the stock prices have rebounded over the last couple of days. So they've cut costs and they're streamlining their service. And as you said, there's a wine glut there, and I think the fundamental problem is that the the next generation just aren't drinking, and it's a global thing. I mean, like, you know, I'm trying to do my best to prop up these stocks.
Same
Yeah.
But unfortunately, like my demographic, I'm in my 50s, and basically, you know, we can't increase our consumption.
Not recommended.
Yeah, exactly. Like
Point.
I am trying, but it's not recommended.
10 stocks picked by you, 2 experts, 1 hour.
Let's get to the companies that have been nominated by you.
It's like a witch hunt over there. Everyone hates data centers.
Just remember that most of their earnings are offshore, so there's no franking credits.
The call is brought to you by Centuria, an ASX-listed property fund manager with $21 billion in assets under management. Want to diversify beyond equities? Explore the Centuria Sydney CBD Prime Office Fund at centuria.com.au.
Righto, as the market settles, let's take a look at the winners and losers in today's trade. The beginning in the green, Megaport. It continues to fly. It was back trading today, lifted, certainly doubling down on its AI play there. 2S also doing well, and some of those unloved stocks, well, they certainly found life today, certainly CSL among them. Whereas the goldies have taken a bit of a tumble, as you can see, Bellevue, Genesis, Pantoro, and lithium miners also under pressure, including Liontown and Mineral Resources. In the smaller caps, Vitrify Life, that's up close to 16%, and Terrace also doing very well today. Euros, Hartley's contemplating a sale of part of its business. And those that have fallen have been led by CBM Resources, and in fact, a bit of movement there once again, also in the resources sector, feeling the pain today. Checking in on what's happening overnight, that key US non-farm payrolls reports, which will be further indication perhaps of what's to come for the Fed. Also, we get a read on US unemployment expected to remain at 4.3%. And in the week ahead, we get surveys in terms of business and consumer sentiment from both NAB and Westpac. Also, inflation for May out of the US midweek. And the ECB makes a rates decision a little later in the week. And we also get an investor briefing, AGMs also from Wesfarmers, Super Retail and Light and Wonder. All right, so let's wrap up where we're finishing just a little lower since I last looked at that just a few minutes ago. Close to 0.75% lower on the CBO 200, S&P ASX 200 off 0.7%, and down around 1.25% for the week. So that brings us to a long weekend. Well, not everyone in Australia, to be fair, as far as we're celebrating the King's birthday. Most states, except Queensland and WA, don't fret, you do get holidays to celebrate the King's birthday a little later in the year. But those who do, enjoy it, and we'll be back again on Tuesday. Thanks for watching and listening.